Good morning everyone, it's Gail with Traders Help Desk, and in this video I just want to go through some of the patterns that I'm going to be looking at this week in the Forex market. So you can see over here I have my scanner window, and this is what I use to monitor different markets in different time frames. So you can see I have the 360 above, the 720 in the middle, and then the daily charts are below that. Now the first thing I want to look at actually is this long divergence on the euro yen. And the long divergence simply means you can anticipate an upward movement because the volume is decreasing on the lows. Now over on the 360-minute time frame, you can see I have the Traders Help Desk ATR support and resistance indicator. In this case, the white is representative of the 360. The blue represents the 720, and the red actually shows the daily. So this way I can see all of the ATRs and the congestion dots within one time frame. Then I have a stochastics on the 360, and I also have one below it on the 720-minute chart. And this actually just tells me whether I am going into a market that is either overextended, maybe overbought or oversold on the higher time frame. So right now on the 360, you have a long volume divergence. Now what interests me is that we have this congestion dot on the daily. We also have an ATR directly below price. If you cannot see that from the 360, then you have the charts over here that are showing you the same thing. Now, if I look at the stochastics, you can see is actually starting to level out and is almost at the point of being overextended. Additionally, if I connect this low with the current low, you can see that we have hidden divergence on the 720. If we do the same thing over here on the daily, you can see we have the potential for hidden divergence. What takes this from hidden divergence in a potential hidden divergence into divergence? That would be a candlestick reversal pattern, a pivot low, a 3-bar reversal to the upside. All of those would actually indicate that the hidden divergence is starting to play out. Now it does have about 60 pips to reach this area, which is where I think it will go. That equates to the congestion dot in the ATR on the higher time frames. Definitely one that I will be watching because we're already starting to show trend divergence on the 360. What is trend divergence? Simple. If you're making lower lows in price but higher lows on the stochastics, that is trend divergence. Now the next one that I would potentially want to look at would be the Aussie dollar, simply because it's at an ATR on the 360-minute chart. Now in this case you can see that you have both the blue and the white ATR above price, and price is currently at the ATR. So this is the 360 ATR, and this is the 720 ATR, and these are the little plus signs here. So as you can see, you're making lower highs, but if we connected these, we're making either equal or higher on the stochastics 360. Now if you look at the 720, it's simply increasing. The next time frame I go to would be the 720, and you can see that the ATR is above price. We could also see that over here. Then if we look down to the daily, we see that this has come up and flipped this ATR from red to blue, and it's come back to test that ATR. This changes whether I would take this trade or not, because more likely than not, they're going to come back and test this congestion dot. So this is a trade immediately I would say, no, I don't want to take this trade, because the daily is telling me that more likely than not, it's actually going to continue up to this congestion dot. In other words, this could be a point of reversal on the Aussie dollar, which means simply that I do not want to take that trade. The next one I want to look at would be the British pound yen, because you can see right here that it is oversold, and that would be on the 720. You can see 720 minutes right there. And when you start to look at this, you can actually see that the stochastics on the 20-minute is overextended, and you're starting to go up on the 360. Also notice that you are at the ATR on the highest time frame. Remember, this is your 720. This is your 360. So this one is from the daily, okay? Now, this is significant because if you are at the daily ATR, daily ATRs are generally very strong. You can also see that over here, it went to the congestion dot on the daily chart. It has retraced back to the ATR. You're almost at the point of being overextended over here on the stochastics. If you connected these lows, you would see that you're having lower lows in the stochastics, higher lows in price. That's hidden divergence. What would make this final a reversal bar to the upside? Now, right now you have potential reversal bar here. This is a low, and with this stochastics overextended, I would expect it to come back and test this ATR, which equates to this blue ATR on my multiple time frame chart. So what I am anticipating is that this will bounce up to the 720 and then come back down. That does not mean that you do not have to watch it at this white ATR or even the white dot. Any of these areas could actually provide resistance. So you do have to watch all three of them, which is why they're on the chart. The next one I would want to look at would be the British pound dollar. You can see that we have the MPK, which means a magenta peak has formed on the 720 minute. That means it's going to go up to the ATR. And that's exactly what you're seeing right here. This is a 3-bar pivot reversal to the upside. More likely than not, you're going to test this ATR at 33.05. You need to watch out for the ATR here because it could offer resistance. But again, you see that you have this 3-bar pivot formation. You can look at the 320, see it there as well. This just simply shows that the market is going to move up. You also had trend divergence with a stochastics that is oversold. These are great pattern formations to trade, especially either on a daily or a 2-hour binary. Just go down in time and watch for the same patterns. Now the next one I would immediately go and look at would be the British pound yen, because you can see it's at the ATR. Now we already knew that because we looked at this earlier. But the one thing that I would notice is while this is at the ATR, you're almost to the point of being overextended. I would expect, at least towards the first of the week, that the British pound yen would move up. Now, the USDJPY, even though you do not have an MPK here, I already know that it has made a magenta peak because this is dark blue. That tells me that it is decreasing in value. You can also see that price is at the ATR on the daily chart. Here's the difference. There's no congestion dot here that has formed. And when you look over here, it's just a few ticks away from this ATR. More likely than not, this is going to bounce up and try to test these areas, okay? That's where I would want to look for a potential entry. You also see that you're overextended on the 360-minute chart. Again, indications that this is likely going to move up. It's going to test for resistance. And it is that test of resistance that tells you whether you want to enter. Now, while I'm looking at this, you also see that this magenta dot simply tells me I had trend divergence when that high was made. But if you extend a line off of that, okay, you can see they came back to test it here. And when they tested it, they formed a bearish bar. That could potentially be a bull trap, okay? And the bull trap, the way it works is it comes down and they're testing for support. Then it goes up and it entices the bulls to enter when their true intention was to take it down. Now, again, your typical point of entry will be when it comes back to test this area and it forms that lower high, okay? That would be a potential entry point into this bull trap. You know, if you're a counter trend trader, you could enter over here, but again, it takes some experience to spot these bull traps, so you may want to enter on the lower high versus the actual bar that indicates the bull trap, or the bear trap if you were in the lows. Now, those are the ones that have probably the higher potential moves on them. Let's go back and potentially look at the euro dollar. Let's see what's going on there. We do have the euro rate announcement this week. So in this case, and this is one of the indications that I know something's fixing to come up. Okay, you made a high, then you flip the ATR, you go back to test this ATR. This should have closed below this line of congestion dots. In other words, it's potentially going into a congestion area, which means there's the major market report more likely than not. You see the same scenario over here on the daily chart. In other words, it went up, broke through, flipped the ATR to blue, came back to test it, and it has not moved beyond the scope of this congestion area. So in this case, if you recognize these patterns, then when these ATRs split and you have blue above and red below, or white above and blue below, then what you can do is trade it where you're moving in this congestion range. You can actually time that with a lower time frame as well. As it looks right now, more likely than not, you're going to go down, especially with the stochastics overextended on the 360. Let's go and look at the Aussie dollar, although I think we already looked at that one. Let's look at the Aussie yen instead. Okay, on the Aussie yen, you can see that we have made a high very reminiscent of a bear trap here, but you can also see that this congestion dot formed. I would be anticipating it to test this ATR, which is the equivalent of these two ATRs over here. You also see on the daily, you have 2/3 of a reversal bar. So that would be indicative that it will also go back and test that high. You can also see that you have made equal lows in price, lower low on the stochastics. Again, this is indicative that the market is likely to go up. What I would like to see is the next bar close above the high of this bar on the daily. Over here, even if they come back and test this area right here, I would like to see a reversal bar form in this area that indicates the market will go up. On the USD Swiss franc, you can see that we have formed a congestion dot here. You can also see that we're at the ATR on the daily. You can also see that if you're just looking at the 360. What I would like to see is that this comes down and touches this red ATR and then goes back up to test for resistance. It's the test of resistance that always creates an entry for me. You can also see that you're almost at the point of being overextended on these stochastics as well, and that would be oversold as it is below the -20 line. So in this case, I'm expecting probably a pop to the upside initially, and then depending on what happens right here, it may actually go down after that. So this was the market report for this week. Now this week we don't have a lot of market reports. The biggest market report we have this week is on Thursday, and that will be on the euro, and it is the ECB press conference and the main refinancing rate. They're expected to have that rate at 0. They're not expected to raise the interest rate. Any surprises on that could cause a lot of movement. Now, the biggest reports are actually the following week. We have the Bank of Japan rate announcement early Monday morning of the following week. Then we have the FOMC statement on August 1st. We have the British pound bank rate and monetary policy summary on Thursday, August the 2nd. And then on August 3rd, which is on Friday, we have the biggest report of the month typically, which is non-farm employment change. Now, they do not have the forecast put up for those yet. I am going to be watching them. We could see some sideways movement on Thursday and Friday just because we have so many market reports. The following week, we'll have people that are actually consolidating the position or exiting the positions because of these market reports.